When this baby hits 88 miles per hour, you're gonna see some serious shit.
Have you ever thought to yourself, I wish I could go back in time and invest in the stock market years earlier? Well, I'm going to show you how you can do just that. The situation that we find ourselves in has presented us with the opportunity of a lifetime. But it's also a time to make very careful, well thought out decisions. Over the coming months, the opportunities will be plentiful, but it's also going to be like navigating a minefield. Not all companies will pull through this, but I'm going to show you one way you can participate in this rally without risking everything you have. And as always, I'm going to share a few key facts to keep in mind in the days and weeks that follow. Here's a chart of the S&P 500 index. You can see that we've fallen approximately 32% from the all-time highs just about a month ago. So what that means is the last time we've seen these prices was back in February of 2017. An interesting little anecdote is that Trump was elected in November of 2015, and currently we're only about 10% above that point. Obviously, I'm ignoring the correction that occurred leading up to his being sworn in as president. But I'm not here to get into politics of any kind. What I'm trying to outline is that nearly all the gains that have been made throughout his entire presidency have nearly been erased. So you have to start asking yourself, what is the market pricing in? Is the economy really worth what it was worth back then? Or are you just getting an opportunity to go back in time and invest in all the companies you wish you had invested in back then? Before I move on to the next chart, there's a couple of things I wanted to outline here to give some context and some perspective. As we know, there's been many instances in the past where we faced extreme fear and extreme unknowns, both in the world and in the economy. In my lifetime, the most extreme event that I can think of was 9/11. If we go back in time to around that period for the S&P 500, what will we find? If we go all the way back to the year 2001 in September 2001. This is September 10th, 2001. The following day were the attacks. The stock market was closed. It did not reopen until the 17th of September, almost a full week later, the following Monday, where the stock market saw a massive drop. Following that, the stock market crashed 14% over the next 5 days. But you can also see that in the 5 days following that, the stock had recovered almost completely, and within a month was back above those levels. Now, you have to be very careful when comparing events in history, because what's happening now is very different than what was happening then. There was a lot of fear and uncertainty, which is what set the stock market lower, but there was not too much concern of a market slowdown. The only point I'm trying to make here is that the stock market tries its best to look forward to what will happen next. They try to price in as much information as they have available to them. The problem is right now we have almost no information. We have no idea what's going to happen next. But what that means is the stock market tends to price in the worst case scenario. And this is why you can see the largest gains always follow the largest losses. Now, with this, I am by no means calling a bottom, and I am by no means suggesting that a week from now we'll be at all-time highs again. If you want to look at another event in history, the 2008 crash looked very different. We had a strong initial pullback of 43% between September and November of that year. But we didn't reach the bottom until March of the following year. And the recovery took some time. This is because there were fundamental differences and real people were affected, not just stocks. I do believe that's more what we're looking at in this scenario, but the reality is there will be some form of capitulation where we reach maximum fear and maximum unknown. That is not to say that at least economically and medically we're out of the woods. It just means that the stock market finally has a level of confidence that it can't get any worse than its current outlook. So while we'll still be afraid, you'll be witnessing a stock market rally. I am not about to predict when this will happen, but it will happen. Picking individual stocks will undoubtedly provide much greater opportunity than simply buying the S&P 500. But the risk is also far greater. Let's have a look at Boeing, for example. Boeing has been absolutely devastated, losing 73% of its value just in the last month alone, and 78% of its value since its high it formed back last April. Obviously, Boeing has other problems, and its future is very much uncertain. If anybody is willing to wager a gamble on a stock like this, it could pay off big time. But on the other hand, you could be throwing your money away. The last time Boeing's stock price was at this level was in May of 2013. That's quite the time machine. Clearly, investors are pricing in the worst case scenario for Boeing. We can also see that oil has found a level that it hasn't seen since March of 2002. 18 years ago. Almost to the day. Now, I'm not a very big commodities trader, but if I was, I'd definitely be paying attention to this. The thing to remember is, if you're an investor right now, and if you're watching this, you probably are, you need to have a plan in place. You should already know where you want to put your money. You should have already researched and be fully aware of what the future potential is of the companies you're interested in. Now, if the prospect of that frightens you, then the safer bet is to simply put your money into an S&P 500 index fund and know that you're instantly diversified. You're not going to enjoy the same gains as somebody who happens to pick a big winner, but you're also pretty much guaranteed not to lose all your money. So the most important thing to remember in all of this is that the stock market is trying to price in the future without knowing what that future is. So it will overreact. This is why Warren Buffett wrote those words. Be fearful when others are greedy, and be greedy only when others are fearful. You're never going to time the bottom. But the market is never going to successfully predict the future. So you stand a better chance at benefiting by buying when everyone else is afraid. Because once the future does become known, once the information the market is looking for is made available, you'll see a huge rally, a huge recovery, not to all-time highs, but certainly well above the bottom, wherever that is. You can choose to wait for that to confirm itself, or you can just keep buying into the panic. Right now, honestly, I am leaning towards investing more into S&P 500 indice ETFs. I think you can take a portion of what you're investing and choose the companies who have already well researched and have utmost confidence that their balance sheets will help them pull through this time we have in front of us. But also be ready for more pain. I don't want it to sound like I believe I'm some kind of oracle. I'm not. But I am trying to predict the future, which is what everyone is trying to do. That's exactly what the stock market does. During all times, we try to predict what earnings will be. We try to predict what production is going to look like a year from now. This is what guidance is. But I do understand human mentality. And the mentality of investors right now is simply that they don't understand what's in front of them. So they price in the worst possible scenario to make sure that they're protected. The reality is, we very rarely see that worst case scenario play out. So, the larger the uncertainty, the greater the fall below intrinsic value. Once that certainty becomes known, there will be a large retracement. Even though through society things will still be very, very difficult, the stock market would have already priced that in, and it will happen quicker than you realize. And then we will begin the slow and steady climb higher as we dig ourselves out of this mess. The key thing to remember here is not to overextend yourself. Make sure you still have your buffer. Moments like this is what those buffers are meant for. It's not meant for you to gamble away. And of course, remember, this is not financial advice. This is for entertainment purposes only. I will continue to follow this story very closely as it evolves. Another somewhat interesting fact is that when you look at the price of Bitcoin, while we have seen a fairly significant pullback in the price along with the rest of the markets, when you look back in time, it last saw this price less than a year ago. In fact, 52 weeks ago, it was at $3,800. So Bitcoin is enjoying nearly a 47% gain year over year. You can't say that about the S&P 500. So remember, if you've always wanted to go back in time and put your money to work, now's your chance. The only problem is, it's a scary ride getting on that time machine. As scary as all this is, the human race has been through far worse, and so have our economic markets. All we need is a level of certainty, something that provides investors confidence that they can go back to understanding what was in front of them. Once this confidence is restored, people can begin to make informed decisions yet again. And as I said, while that in no way means that we're in the clear, it just means that as far as the stock market is concerned, we have a clear path forward. That doesn't mean that the situation that we're in is going to be over. In fact, there'll still be a lot of fear in the public. But the stock market will continue to rise, so long as the feeling in the investment community is that the worst is known. So let's see how things develop over the coming weeks. Stay safe out there. Now, let's get back to empire building.